Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, which today is from my friends over at Brainwashed Coffee, fantastic company that donates to amazing causes in the addiction community for bags of coffee that you buy, so check them out. In today's episode, I'm talking about how the impending Ethereum Proof of Stake merge could affect the crypto markets at large, a hot Cardano DEX, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all the updates we've got in store on the show. If you like crypto, please subscribe to the channel, hit the bell notification button, or you can follow the podcast on your platform of choice like Spotify or Apple Podcasts, so you get a heads up whenever I post new episodes of the Crypto Over Coffee show. And better yet, if you are a subscriber and you leave a comment on the YouTube video, you'll automatically be entered to win a random draw for a Keystone Pro hardware wallet every single week. Finally, a friendly reminder, a reminder I wish I didn't have to make, but please be aware of scammers that are across all social media platforms. They're pretending to be me and asking you for money or for personal information or for both. So remember, I will not reach out to you. I'm not going to ask you for a sponsorship. I'm not going to ask you for money. And if you get a comment on YouTube that asks you to contact me on some social media platform or WhatsApp, just report it. Please be safe. And folks, the time has finally arrived. Ethereum is making its final preparations for the Great Merge, which will see the smart contract execution environment from the existing proof of work network we have today and merge it with the proof of stake consensus layer that has been idling patiently by as development efforts have continued on the Ethereum protocol of the future. This week, in what appears to be the final stage of testing before public testnet launches on existing testnets like Goerli, Ethereum core developers and communities oversaw a successful merge testnet called Kiln. And this was a live run of what the merge itself will entail when mainnet comes. And when it comes to mainnet, this merge of the execution layer and consensus layer will represent the biggest change to Ethereum since its earliest days. And it'll set the stage for the whole slew of upgrades to come that will help Ethereum meet the demand it sees from users better and better over time. The result of the merge itself and the new Ethereum network that results from it will deliver more predictable block times, likely a greater degree of security and stability, and of course, a massive 98% or plus, so maybe more than 98% reduction in energy consumption in operating the Ethereum network. On the back of this, we may see a surprising impact on the crypto markets because of that, as the merge will also usher in a major shift in the entire dynamic around the cryptocurrency space and the conversation therein related to NFTs, gaming, DeFi, and the metaverse. Why is that? Because the mainstream media and many vocal detractors of cryptocurrency, NFTs, and the like are running out of excuses as to why people should outright hate this entire industry. Ethereum is still home to the brunt of NFT volume, some of the world's largest DeFi protocols by volume, and many of the blockchain gaming and metaverse projects. And guess what the main negative talking point is against a lot of these things? Energy consumption and the environmental impact. When an Ethereum transaction becomes comparable in energy consumption to the angry tweets that crypto haters are posting, a lot of the detraction will begin to dissolve. And many will dismiss this whole idea as minutia, or they'll say, hey, Hashoshi, my favorite blockchain has been energy efficient with proof of stake for years. What gives, man? This is ridiculous. I get that. But I'm just being honest. Ethereum is still a leader in this space, especially in the media world, especially when it comes to dollars and cents. There's lots of money in Ethereum. And the average crypto hater doesn't know the difference between Ethereum and Cardano, Ethereum and Phantom, Ethereum and Avalanche. They just see a big infographic that says NFTs are boiling the ocean, and they get angry. And that argument will now be gone. It will also be a great way to weed out the crypto haters who aren't doing their due diligence, because those who continue to harp on the environmental impact point about NFTs in particular will be clear in their carelessness for the facts. That said, there are more direct impacts that this merge can have on the rest of the crypto markets outside of the global conversation, which is important. But the first of these is renewed confidence in Ethereum itself, which, if the launch of EIP 1559 was any indicator, can have a pretty resounding impact on the price of Ether and the price of assets that live on Ethereum's blockchain. The talk of deflationary ETH will begin to pop off again with the Ether burning and issuance dynamics that will take effect post-merge. And it seems that that speculation's already started, actually, given Ethereum's rebound towards $3,000 Ether on Friday, with DeFi coins also seeing a nice bump in that move up as well. Outside of Ethereum's own purview, though, Layer 2 networks and sidechains that tightly integrate or work with Ethereum will also reap rewards here, with the L2-focused ecosystem that Vitalik Buterin has been talking about for this entire year in his speaking engagements coming into focus. The macro conditions in the world are much different than the last time Ethereum has had a monumental change. And to call EIP 1559 monumental in comparison to this merge would be kind of silly. This merge is way bigger. So the question remains, can excitement around Ethereum's biggest change in history pull us out of this market slump when it comes to certain areas of the market? And that's a question that none of us can answer definitively. But I do believe that we will see a positive reaction in the markets post-merge later this year if the reaction to a merge testnet is any indicator. Now, folks, if you want to add Ethereum to your list of long-term cryptocurrency holdings, like I have, and you're in the USA, you can open a self-directed individual retirement account, or IRA, at iTrustCapital, one of the channel sponsors, and trade crypto in a tax-advantaged manner. Of course, you should always be mindful of the risks of trading crypto both in and out of your retirement account, but iTrustCapital has been an indispensable tool for me in my crypto investing journey, setting myself up for the long term with assets that I believe in well beyond just this few-year time frame. So you can sign up using the link in the description and get a $100 Bitcoin sign-on bonus upon funding your account if you are interested. Thank you in advance for that. Now, in other news, it looks like the ever-popular Terra ecosystem that issues the algorithmic UST stablecoin has already begun executing on its plan to add Bitcoin in large volume to its reserves of assets that back that UST stablecoin. This year, much ado has been made about the risk of UST losing its US dollar peg and sending the market into tumult, which has likely prompted this action to fortify the reserves of the protocol to ensure that all those fears are quelled and that it is mathematically impossible, in the words of Do Kwon, the founder of Terraform Labs, for people to claim this. Now, Terraform Labs is core to the whole Terra ecosystem, and Do Kwon, one of the founders, recently tweeted about a somewhat vague goal to purchase $10 billion worth of Bitcoin to fortify the UST reserves, which, if executed in full, will be a significant thing for both Bitcoin and for Terra. First of all, a little buying pressure for Bitcoin is a sight for sore eyes, and I believe that one of the only big things holding Terra back right now is this back and forth about the stability and longevity of UST and the sustainability of yields on Anchor Protocol atop Terra. And Anchor Protocol is a DeFi platform that offers significant interest rates on UST savings, by the way. If both of these areas of concern are alleviated, I cannot see why Terra's Luna cryptocurrency couldn't continue last month's market condition-defying run up in price. What I want to see personally as a fan of Terra is a formalized plan for Bitcoin reserves, including how they'll be bought, how they'll be used, and how it will be held. And I want to see a formal plan for the long-term sustainability of yields on Anchor Protocol without direct injections of funds to the Treasury all often. So it's very interesting stuff, folks. Still developing, of course, still kind of unfolding, but very interesting nonetheless. We'll be watching this one. Now, this next story gave me quite a bit of personal, deep-rooted satisfaction because it represents a rather surprising, but albeit welcome shift in rhetoric from the US Treasury Department in regard to crypto. The recently published series of reports, basically named the National Risk Assessments for Money Laundering, Terrorist Financing, and Proliferation Financing, those delve into the financial instruments used for illicit activities and the risks therein of those things being used. In these reports, published by the Department of Treasury, years of misrepresentative rhetoric around cryptocurrency being a boon for all manner of criminals has all but been washed away as a farce. Now, a big shout out to Bitcoin Magazine for pulling out some of the best quotes from the reports and saving me that time, but here's a few. First quote: "The use of virtual assets for money laundering remains far below that of fiat currency and more traditional methods," end quote. That's from the report on money laundering. Now let's shift to the report on terrorist financing. Quote: "Terrorist use of virtual assets appears to remain limited when compared to other financial products and services," end quote. And finally, the proliferation report. Quote: There is no evidence that a proliferation network has used a virtual currency asset, a virtual asset to procure a specific proliferation sensitive good or technology. Now, isn't that interesting? It's almost like what myself and countless others in this space have been saying for years now is actually true. Criminals are not really using cryptocurrency in a huge volume. Who would have thought? Now, if only we could get the mainstream media, the countless journalists and social media personalities who have published these tropes about cryptocurrency being a boon for criminals to post about these findings to the contrary. Now, of course, I won't hold my breath, but it's very, very interesting to see these reports coming out with definitive study by the Department of Treasury on this matter and different groups behind them. Now, it's been a long run for DeFi on Cardano, with ups and downs and everything in between, and that's no secret. But there's one project that I want to highlight that has quietly worked since day one and done so with integrity, and that is the Minswap team. Now, I've had the chance to speak with Long, one of the founders, and others on the team in the past, and I've participated in the testnets for Minswap, and their successful mainnet launch earlier in March was a really great moment to see and very much well-deserved. Since launch, Minswap has taken up the top spot in the decentralized exchange total value locked metric at over 121 million at the time of recording. Is it an Ethereum-sized protocol just yet? Maybe not, but it's chugging along really nicely, and it's in the number one spot in Cardano. And they're trickling out new features as time wears on as well. Most recently, Minswap launched yield farming support, letting liquidity providers farm yield on the platform, and all the great features you'd expect from a DEX like swaps, liquidity provisioning, single-sided liquidity, etc. are all available for users on mainnet for Cardano. Minswap's a shining example to me of what building on Cardano is all about. Keeping your head down, building in whatever time it takes to build things the right way, and learning from mistakes along the way, using testnets to find bugs for real. Not only that, but without aggressive marketing or a ton of hype to push your product. Now, I really respect what the Minswap team delivered here, and I urge you to check it out for yourself at app.minswap.org. Make sure you mind that URL and watch out for phishing. Never give your seed phrase to anyone, by the way. Now, stay tuned for more Minswap content as I have an interview with them with insights from their process of building that DEX. Now, it is time for Rational Reactions, a new segment on the show, well, kind of new, where I read headlines from crypto-related publications and give you my instant rational reaction to that headline. So let's switch over to the computer and get started with that. All right, let's go ahead and get started here with Rational Reactions. I've got these stories pulled up here, and let's see where we got the first one. First story of the day from Cointelegraph. Miners that hodl the most Bitcoin are, quote, relentlessly expanding. According to a series of mining metrics, not only are miners holding hard, they're also dramatically increasing their hash rate. Now, this is something we've actually seen quite a bit in the actual data. I think a few weeks ago, I showed that the difficulty and hash rate are well past or at all-time highs for Bitcoin, and the price is not. Right, so we have this incongruency between those two metrics, which have generally been kind of clustered together or correlated together. Of course, correlation isn't necessarily causation. We know this. But the reality is very interesting to watch this happening, because it seems like after China expelled miners from their country, it looks like countries like the United States and other Western countries and a lot of Latin American countries have started to up their hash rate and to up their mining operations. It really looks like people are using mining as a way to accumulate Bitcoin. And it's very, very cool to see. And it will be an interesting storyline to watch as the macroeconomic conditions in the world shift and the price of Bitcoin also shifts with all that's going on right now. So we'll be watching this one. Very interesting. The next story is from CoinDesk. This is a market-focused story. It's about Thorchain, a project that I like. They've had a tough time, but I like them. Thorchain's RUNE continues to rally after positive ecosystem developments. The RUNE protocol went live with synthetic assets trading on its platform last Thursday. And this story was posted on March 15th and updated on March 17th. So you have a little bit of context. This was this week. Now, here are my thoughts. Thorchain is a great example of how to respond to probably one of the worst possible scenarios that you can have in the world of a DeFi protocol, particularly in a sort of cross-chain DeFi protocol. There was an exploit, a pretty bad one. They shut it down, fix the exploit, bring things back up. There's another exploit. They basically have to tear everything down for the most part, major components, fix all the issues, work with auditors, go through this long process to make sure everything is working and come back. Accepting responsibility, taking action, coming back, and now they're reaping the rewards. The price, of course, going back up with the demand and with the use of Thorchain. You can win back trust after an exploit because hacks and exploits can happen to anyone, audits or not, but you have to do similar to what Thorchain has done, the team has done, really pushing forward and winning and earning back that trust, especially in this space. So really interesting stuff that I think a lot of people should place focus on. If you have a project that you support that's had an exploit, it's not really necessarily the end. It's about the response. It's about how that project responds and how they fix the problem. So Thorchain's a great example of that. And I think this story, even though it's really more so talking about the price, is a great way to start that conversation. Now, the next story is from TechCrunch. I used to read TechCrunch every day, actually. Haven't done so in a while. This story headline is Ukraine's president signs law to legalize crypto as digital donations roll in. Now, again, this is another one that I'd like to make the point. If crypto is all bad and for criminals, then why exactly is all of this money flowing into Ukraine to support Ukraine in cryptocurrency? The reality is that cryptocurrencies now become a boon here because those who might have been reliant on a banking system that's not really functioning right now in Ukraine very effectively, or those who relied on business interests or they relied on external business interests overseas, whatever that might be, they might be struggling right now. And crypto is a way that they can actually continue to function, even though things are a complete mess there. The other thing is, I didn't realize that it wasn't necessarily legal in Ukraine already. Now, legal may just mean, in this case, creating a framework for the legal use of cryptocurrency. I know cryptocurrency's been around in Ukraine for a little while now, and there are some exchanges there already. What this basically means now, I believe, and I'm speculating, is that now those who are using cryptocurrency can do so with clear regulations and rules, and can also move from crypto to fiat currency locally, maybe multiple fiat currencies. So this is really interesting. I think that the biggest thing that I want to see come out of this is other countries looking at this scenario and seeing the positive side of crypto. And there are some negatives, but seeing the positive side of crypto, both with the community, but also as a tool during this type of time, if your country is in a rough way right now. This is very interesting. And it's also something I respect, that they're actually still actively lawmaking and working despite what's going on there. So honestly, blown away by that. And the last story of the day is from CoinDesk as well. And this is about a project that I'm a pretty big fan of, and I've talked about a couple times on the show before. That is Parallel Finance in the Polkadot ecosystem. The headline reads this: Parallel Finance launches DeFi, quote, super app for Polkadot crypto ecosystem. The lending protocol with 500 million in total value locked is making a play for market dominance. Now, Polkadot has not yet garnered the type of excitement that a lot of people thought it would. I think it's because it's taken a long time to build. It's very complex. People don't understand it very well. The crowd loan process was a little bit nebulous for people who weren't comfortable. There were some regulatory issues with that if you're in the US, for example. All that being said, projects like Parallel Finance are the ticket to bringing in the users and the liquidity for Polkadot when that time comes. Parallel Finance is a project that you should be looking into. It's a really interesting one. Lots of interesting things to read online about Parallel Finance. This whole idea of a DeFi super app basically being a one-stop shop for all things DeFi, being a hub for DeFi, is something that you're going to see happening more and more in different ecosystems. You're seeing it in Cosmos, even though it's not using the word super app. Parallel Finance, Polkadot, it's a sleeping giant, the Polkadot ecosystem. watch this space, keep your eye on it. I'm a big fan of Polkadot. You know that. By the way, got a video coming about Polkadot. It's getting really close. It's very complex, like I said, so I want to make sure everything is as clear as possible when I do post the video. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots, please hit that like button, get subscribed, follow the podcast, whatever you can do to tell those robots that you're enjoying this content and that others might also enjoy it. Heck, you can even share it with your friends and family if you want. So thank you for that in advance. And a quick little coffee break here. Beautiful. Now, my original temptation for my down-home pan-fried 404 Logic Not Found today was to tackle the ridiculous lack of media coverage on the findings that crypto is not actually used for illicit activity in a meaningful way that we talked about earlier. But there was then this little issue of the International Monetary Fund, or IMF for short, pulling one of the most pitiful and frankly laughable attempts to combat the adoption of cryptocurrency that I have ever seen. So let's take a peek at the backstory so this all makes sense, shall we? Let's travel in our minds to Argentina, a country that has been grappling with economic turmoil for a good long while now, defaulting on debt, etc. Recently, Argentina has been on the brink of defaulting on a loan furnished by the IMF in 2018. A contentious debate in the country has gone on around the restructuring of that loan to avoid default, and it seems that a deal has been reached between Argentina and the IMF. But that deal has a rather eyebrow-raising term tucked away inside. Reportedly, as part of the deal to restructure the loan, the IMF has asked Argentina, quote, to discourage the use of cryptocurrencies with a view to preventing money laundering, informality, and disintermediation. Now, we already knocked out the money laundering part. The US Treasury Department made that one very, very clear. Now, informality, you mean cash? I just bought a taco 3-pack from a guy on a street corner with the crumpled up $5 bill the other day. The tacos were delicious, but how much more informal can you get? Oh, and disintermediation. That's a good one. Removing middlemen. I can see why the IMF might not want that one. I mean, really, this is a loan sharky move to me, like something a Disney movie villain would pull where it's like half pitiful, half infuriating, and just mostly funny. That's like me going to Navy Federal for a loan and then putting in a term that says I should discourage my family from eating fast food. Like, what relevance does that have? It's so clear that the IMF, whose original founding mandate was to, quote, avoid repeating the competitive currency devaluations that contributed to the Great Depression of the 1930s, has shifted its agenda pretty firmly towards at least partially denigrating cryptocurrency in any form of decentralization whatsoever at any chance it gets. What's ironic is that cryptocurrency is not what's causing depression-like conditions in the global financial system. That would be the frivolous spending, money printing, and overarching fiscal irresponsibility that's been shown by the very people who really don't want to be disintermediated. There are so many 404s here, it's like mind-boggling. First, you have a formal term imposed on Argentina to discourage the use of cryptocurrency. Who knows what that means anyway? Second, you have the fact that the IMF is completely missing any semblance of factual basis for their claims about cryptocurrency, if the reports are to be believed. And finally, it seems rather counterproductive for the IMF to be spending all this energy going after cryptocurrency, which represents true free market counterpoints to the IMF's reported mortal enemy, which is communism. Tongue-in-cheek quips aside, this is all foolish, and I hope that Argentina comes through this financial disaster, clears this whole mess, and calls this farce out for what it really is on the world stage. And you know what that means. It's a 404 Logic Not Found. Now, really quickly now, before we dive into Q&A, I want to thank the newest sponsor of Crypto Over Coffee, Masterworks. For a long time, I've talked about taking profits in crypto, having a plan, and for me, a big part of that has been rolling crypto profits into diversified long-term asset investments like wine, whiskey, real estate, and fine art. And I've always been enamored with the art space, and Masterworks was a perfect spot for me to invest in art without having to network myself heavily in the fine art world or buy entire pieces altogether. Masterworks sources some of the world's finest art from artists like Banksy and Monet and lets folks like you and me invest in that art for an accessible price per share. Since 1995, contemporary art prices have outpaced the S&P 500 returns by nearly 200%. And while past performance doesn't predict the future, I am of the opinion that the demand for art will only continue to increase over time. So if you want to start investing in fine art yourself, check out the link in the description below and have a look for yourself at Masterworks platform and let me know what you think. All right, folks, as promised, let's do some community Q&A. I love answering questions from folks who watch or listen to the show, and I've got some questions from last week's episode that I'm going to answer, and I want to remind you that if you have a question that you want answered, leave that question in the comments below on YouTube, or if you're listening on the podcast platform, you can tweet that question to me at Hashoshi4 as well. All right, let's dive into the questions and round out this episode for the day. The first question of the day is from Banana Farm. Cool name. What's your opinion on using an offline old Android phone as cold storage that stays turned off all the time? Now, I don't think there's anything horrendously wrong with doing this to take an old Android phone. I'd recommend rooting it, wiping out most of what's on there, and installing your own custom firmware if you can. Something provably secure, something recent. Security patching is important. You also want to realize that just if you have Wi-Fi and cellular and stuff turned off, so if you take the SIM out and you don't have any Wi-Fi networks on there, I'd still would just rather there not be sensors in there in the first place. I wouldn't like to have Bluetooth, cellular radio, or Wi-Fi radio in there. Frankly, I would just rather it not be there. But if you do want to go that route, make sure you look up guides and processes or sources in order to do this. If you want to find this, one person that I know that might have some interesting insights on how to convert this old Android phone into something that's pretty safe and secure to use for something like this would be Mind Your Biz. You can probably reach Mind Your Biz on Twitter. That'd probably be the best place. I'll leave a link to the Twitter in the description below, and if I forget, please remind me. But I think that would be cool. I think he's done this with some phones, but I think it's dependent on what type of phone you have, what level of access you have to it, that sort of thing. I would say if I had to make a distinct recommendation, you can do this, but I would say I would rather you get a hardware wallet, which is one that's purpose-built for this purpose. If you like the mobile phone sort of form factor, the Keystone Pro is a fantastic wallet. Just my 2 cents. Thanks for your question. The next question is from Making a Difference. Great content again. Thank you for that. Any tips for Canadians with a parallel type crypto IRA needs? So basically, this is a question around, can Canadians use something like iTrustCapital? Because iTrustCapital sponsored the show, something I've used for a long time, even before they sponsored the show. They're a great tool for people that want to invest in crypto on a long-term basis. Now, I have been looking for something like this in Canada, and there's not really anything exactly like this because retirement accounts are different in Canada. They're similar, but different. Same in different places around the world. In Canada, I did see that Wealthsimple, I believe it is, allows you to invest a small amount through employer plans into sort of these ETF-style cryptocurrency investment vehicles. So you can get exposure to something like Bitcoin and Ether through ETFs. I think that this is something that needs to develop, and I think that if you are in Canada, you should be advocating to your representation or advocating as well to companies like crypto exchanges that you know to try and pursue something like this, because if there's demand, you know that companies are going to try and push for it. The thing is, regulatory is a really, really critical piece here, and retirement accounts are something that deserves some sanctity, right? You need to be very careful investing in crypto in your retirement account because that's the money you have to fall back on, right? That's the money that you got to live for and live with for the rest of your life after you stop working. So you don't want to drop it into, super degen mode and be speculative. All my retirement crypto is in like blue chip stuff that I really believe in. And if I lose all that money, I'm still not off track for retirement, right? That's the way that I approach it. So Wealthsimple seems like an option. I'll keep my eyes peeled on this one and let you know if anything changes and if I see anything like this in Canada. And if I'm missing something and you know about it, let me know in the comments. All right, last question of the day is from Soilpunk. Your response to the blockchain domain question kind of answered the question I asked on Twitter. Thank you for asking that question. Are ENS domains actually more popular, despite them having yearly renewals, unlike unstoppable domains? They seem to be, from my point of view, and if so, is it just because ENS is seen as more decentralized? So I would say it's hard to quantify whether ENS or unstoppable domains are more popular. Probably ENS. The reason is Ethereum name service has been a sort of staple on Twitter where you put your .eth name in there. You also have a lot of companies that have used ENS for their platform. You had ENS being integrated into applications like dApps earlier on than you did unstoppable domains. That's just the way it is. I'm not trying to detract from unstoppable domains, and I don't think that anyone would say that there are no merits to both. There are. ENS has a little bit more functionality natively. You can do subdomains. You can do a lot of things with ENS. I don't even want to go through the whole list of stuff that you can do. You can do a lot of things with ENS. ENS is thought of as more decentralized. Maybe it is. Actually, it probably is. The DAO is the DAO, and I don't think DAOs are necessarily 100% decentralized most of the time. But ENS started as a community project, and it was always built on chain, and it was always built with that sort of ethos in mind. And unstoppable domains isn't so shabby in that way either. But I would say the biggest thing that is different between the two is people are willing to pay those yearly renewals for the status of having an ENS name and the use case of having that ENS name and what it allows you to do. But you have a lot of big names, big Ethereum influencers, and I hate that word, but big Ethereum influencers or thought leaders that are all about ENS. And you don't see many of those people using .crypto domains or .nft domains. And that's just the way it is. So the reality is, it's not necessarily that one is far superior to the other. They're just different. They both accomplish very similar things. I have both. I use ENS names and my unstoppable domains fairly often. So I don't really have a major preference. If I were building something from scratch, like a dApp, I would probably want to use ENS because it gives me more flexibility in how I'm managing that domain and subs underneath it. But that's just from a builder perspective, I suppose it's more useful in some cases. For an individual user, I think it's more or less the same, but that's just my opinion. So thank you for your question. Hopefully this cleared up the remaining confusion that there was, and I appreciate you following up. I always look out for follow-up on questions that I answer prior. That's going to do it for the questions today. And of course, that's going to do it for Crypto Over Coffee today. Thank you so much for watching or listening to this episode of Crypto Over Coffee and any other episodes you've watched or listened to. And if you have some time, please stick around to watch some other videos on the channel. I'm kind of ramping back up here, trying to get a good backlog of content out there so that I can get consistent. Right now, we're kind of on weekly video, like one weekly video. We'll come back to 2, maybe 3 after that. And I just want to say, I hope you and your family have a wonderful weekend and week ahead. And until next time, cheers.